All right, so we are roughly 1 hour from the market open, and I just want to do a quick video just to explain some of the stocks I'm watching and how they fit into my 7 indicator plan. I'm looking for big percent gainers always. Volatile stocks. This is Stocks to Trade, by the way. This is my platform that I use. You can see my watch list is here on the left-hand side. Big percent gainers are over here. This is the chart of the stock that I'm watching. Here is the level 2 of the stock that I'm watching. Here's some recent trades, pre-market trading. Some of you guys only think, oh, the stock market opens at 9:30 a.m. Eastern. Well, there's pre-market and after hours for the true degenerate gamblers. I don't really like to trade pre-market, but I use it as a guide. For example, PEIX is up 11% pre-market right now. I don't care whether it's up 5% or 10% or even 20%. The fact is that it's up, and if you look at the recent news, they just reported earnings. You can see here we have on Stocks to Trade some nice little news alerts too, so you can see exactly when they reported earnings. And in reaction to earnings, this stock is spiking. So this is a potential earnings winner. I wouldn't call it an earnings winner yet, because it's just pre-market and the volume is very light. But so far, the reaction to earnings is pretty good. So I'm going to be watching this stock when the market opens in an hour to see if it can really continue. Another hot play is this, where was it? EVOK right now. And EVOK, this is just a 2-day chart, so it's already nearly doubled from the 160s all the way to the 3s pre-market. If you look at the news, there's some SEC filings here, an SC13G filing, which basically just means that there are new investors who have added to their position. I highly encourage you to watch me and Michael Good's DVD called Learn to Read SEC Filings so you can learn what the different filings mean. But for me, when there's new investors, okay, that's a good catalyst. It's a potential buy, but at the same time, it's up a lot already. And if you scroll out to, a longer term chart, this is not a good chart. It was uptrending, and then some serious, bad news here, and it looks like their lead product failed, and so the stock dropped from 10 down to the 2s. So now maybe, these investors are seeing some value, but this is a very, very tough chart for me to ever really buy because, you have long-term shareholders who, frankly, just want to get out at any price, and they'll be happy to sell into a spike because, just the other day the stock was trading around $1. Now it's 2.5. So if you were thinking about cutting losses, well, now's a good time to do it because, the stock is up so much. I give the example that this is like, ordering bad sushi at a grocery store. I don't know if you guys have ever eaten sushi from a grocery store. I have in the past, when I wasn't always so rich. And at one point in my life, I was looking to save money. And grocery stores, they sell sushi all day long. Like they have like a little sushi chef in the grocery store. Some grocery stores do. Especially, this was when I was living in New York. And, late in the day, the sushi can be, sometimes there's a little sign that says 50% off because it's a very quickly depreciating asset, right? Like sushi the next day is not necessarily good. It can be very bad for your health. So sometimes I would get the 50% off sushi, like late day. I remember this one little cafe called Duke's in New York on Broadway. I don't know if it's still there. And I was like, oh, I'll save, $7. I like saving money. I don't think I even really needed to save the $7. I just like it. I'm Jewish. I like a good deal. And, most of the time I was okay when I got the $7 off or the $8 off. But, 1 or 2 times my stomach didn't feel so good. I wouldn't say it was like full-blown food poisoning, but I definitely didn't feel good. And it wasn't worth saving $7. And since those 1 or 2 times when I didn't feel so good, I have never gotten the 50% off sushi. And the same thing on a stock like this, I don't like buying stocks that are down 80%. Even if, chances are you might be okay buying them, it's just not worth it, for me at least. When there's a stock like this with this chart, this is not my chart pattern. I talk a lot about the patterns that I like and the charts that I like. This is not it. PEIX, let's see this longer term chart. Let's scroll out to 2 months. I like looking at multiple time frames. Not great, but let's scroll out to 6 months. At least it's uptrending. There's no big, 50% off or 80% off sushi grocery store drop off. The 1 year isn't that great. Let me look at the 5 year. You have a big drop off the highs. It looks like it's had a tough time trying to come back. That said, this could be finally, the big breakout. It looks like there's resistance here. Let me zoom in more because now I want to see where the resistance is. So now it looks like the breakout level is 660. Pre-market with it trading in the 705. This is a multi-month breakout. That said, it's also an energy company, Pacific Ethanol. Energy companies are not my favorite sector. So you have some good and some bad. Let's go over the indicators real quick. So I just, have this prepared just for ease of use. We'll have a tool like this online for you soon. But these are the various indicators. So let's look at PEIX for a second. The pattern price, as I said, it's not terrible, but it's not great. It is a breakout above 660, so that's, give that a few points. If it came down to 660, I might be, more enthusiastic. Right now, it's probably a little overextended in the sevens. So it is a breakout. It is a multi-month breakout. It has a decent long-term chart, but not great. And it's a little overextended past the breakout. So on a level of 1 to 20, I will give this one a 12. Again, it's not an exact science. I'm just estimating. Risk reward here at $7. I don't think it's that great. If it came down to 660 or 670, then it would have better risk reward because it would be closer to the breakout. That said, though, if it comes down to 660 or 670 from the current price at 7-ish, well then, is it even going to be an earnings winner? So that's tough. I'll give this one, I'll split it down the middle. Risk reward is a 10. Ease of entry and exit, can I get in and can I get out pretty easily? Sorry, that was my E-Trade Pro. I use E-Trade Pro too sometimes. But on stocks to trade, I can probably get in and get out. You can see the volume here. The volume goes up very nicely. Let's just say that. There's millions of shares traded. Let's look over the past year just to see the volume. The volume gets up to like a few 100,000. So if I'm going to take a position of 1,000 or two, I can do that. So I'll give the ease of entry and exit, I'll give it a 7. I don't know if it's a 10 yet because we got to see what the volume looks like. Does it have a past performance or history of spiking? Oh, man. And this is tough, too, because, I also prefer low float stocks because they can really spike. They can really go supernova, especially right now. History of spiking, I got to give this a 3. It does not have a history of really going supernova. So I can't rate that highly. What time is it? Personal schedule? Well, so this is going to change based on the time of day. But today I have all day to trade. My personal schedule is clear, but what time is it right now? As I'm filling this out, it's pre-market, so I'm not going to trade it. I'll give this a 12 right now because I'm just watching. The reason in the catalyst, it's an earnings play. So earnings plays, that's one of the catalysts that I like to buy. But right now, earnings winners haven't been the biggest winners. So I will give this 6. And the market environment right now is ripe. for trading, but again, not for really earnings winners. It's ripe for low float market cap, low market cap, low float plays, and this is not one of them. So I'll give this one a 6. So the value of the trade is a 56, and that's about accurate. It's a potential trade, but it's not anywhere close to being a definite trade for me yet. There's all this resistance here in the low 7s, and right now, even though pre-market it's 7 by 730, it's only traded a little bit. Let's analyze a different play, and that's how I view it. Like some plays are close to 100, some are close to 0. This is a 56. It's a potential play, but it's not strong enough right now for me to trade it or even really get that excited. So I'm glad that you see that. So let's zero everything out for this new play. And I know it seems complicated to put all these numbers in, but I will tell you it gets easier and you'll internalize it over time. This is just day one that you're seeing this. And I just want to get you thinking about all these indicators. All right, so EVOK, the pattern and the price, it has spiked recently. Just since literally this is yesterday afternoon, from the 1s to the 3s, so it has spiked. But again, remember the longer term chart is no bueno. This has that bad sushi example. So for the pattern and the price, this is not my pattern at all. I'm going to give this a 3 because it has spiked recently, but it's not my pattern. Risk reward right now, I don't even know where it's going to go. I mean, it's already, it's downtrending so far pre-market right now, but it's already spiked. Let me show you, 2 days. So it's coming off the top here. I guess you could say, okay, potential dip buy, and maybe it gets back to 3. It does have the news, it does have the volume, and it also has a low market cap. So on this one, risk reward, I'll give it a 7. No, I'll give it a 10. Split it down the middle. Ease of entry and exit, this is very volatile, very liquid, so I'll give it a 10. I can get in and get out very easily. Past performance history is spiking. This is a bad one. I'm sorry, because again, it has that really bad long-term chart. And that leads me to believe that, long-term bitter shareholders are going to sell into this spike. What time is it? Personal schedule. Again, I have the whole day free to trade if I wanted to. But right now, as I'm, filming this and analyzing it, it's a little too early for me. So I will give this I'll give it an 8. Reason Catalyst, it's up on new investors, which pretty good lately. You have to look and see how other similar plays have done recently. I'll give this a 7 out of 10. And the market environment for this kind of a play is right because it's low float. So this is a 52. And, again, this isn't an exact science, whether it's a 52 or a 56 or even a 60 or even a 40. This is a guide to show you that it is not, a great play right now. I don't need to trade it. I will trade it if it can be better, but the numbers simply don't add up. And I'm very kind of glad that it doesn't add up because, even before me putting all these numbers in, I would say, I'm watching it versus my chat room who is loving it. Let me just show you my chat room right now. We have 700 traders and they're all like, EVOK, this is great. This is amazing. I'm sorry. I don't see it. And I think if you look at the numbers instead of just getting all hyped up about any stock that is moving, you too will see that neither of these plays are that great. I'm also watching MDGS. So let's analyze that real quick. This was a big spiker yesterday. I tried buying this right at 2 and it just blew through me. I did not get executed. In this case, it was actually good to chase it. I could have bought it in the 230s, which I had a chance to, but I didn't want to chase it. It went all the way to 325 in the first 10 minutes yesterday. So pretty amazing spike. Why was I buying it at 2 or trying to buy it at 2? Well, if you look at the multi-month chart, there was huge resistance right here at 2-ish. Going back, we're in July of 2016, going back here to March. So I really like buying when there's a breakout, no different than, PEIX at 660. But this one, I really wanted to buy it at 2. I was just trying to buy 5,000 shares, and it went way too quickly yesterday. So the news was yesterday, the catalyst was that they received their first purchase order from a hospital for their system. So this is basically a contract winner, and that's very good news. And you can see, the float here. I guess we don't have float information. Some of this stuff is, these stocks are too new, but this is a low float, low market cap company. And you can see here, they have 55 employees. They have this system, and it was a big contract winner. So that was the news yesterday, and I missed it. And I was, really kind of disappointed. That said, I'm not going to chase, even though in this case it would have been okay. Let me show a 1-day chart just so you can see of, I guess I got to show 2 days. Today is a new day. It's still early. Give me a break. But yesterday, it kind of held 2 all day. And I thought about dip buying it, because 2 should act as support. But aside from that big morning spike, it really couldn't bounce that much. Like, even though it used 2 as support, it was a nice bounce from 2 to 230, and then back down to 2, and then 230, and then up to like 250, but then back down to 2. I just wasn't sure, and if you're not sure, you don't have to trade. Morning spikes have been the hottest. So oftentimes you will see me try to play the morning spike, and if I miss it, I'm not going to play it again. It's just that simple. But now the question is, can it spike again? This is day 2. So let us analyze it. MDGS. Zero everything out so I'm not confused. All right, pattern price. So this is the hot play right now. Morning spikes, low market cap, low float play, big volume. It was too quick yesterday. So I will give this an 18. It's nearly a perfect 20. Not quite, because, frankly, there are a lot of sellers. Actually, I'm going to even lower this one to 16 because it couldn't really bounce. Yesterday, at the market open, it would have been a 20 because it would be day 1 of the news. Everyone's all excited. Now, day 2, you have to take a few points off because it couldn't bounce that well. Risk reward right here at 226. The bounce goes up to 250. The low is 2, so it's mid-range. So right now at the current price, not great risk reward. Remember, I don't like trading mid-range. So, it's not terrible. It could very easily go back to 250. But I'll give this an 8 right now out of 20. Ease of entry and exit. As yesterday proved, it was too quick to get in. And if I had been wrong, it would have been too quick to get out. So I'll give this a 5 because it's literally moves too quick. Past performance history of spiking, this is a 10 because, yesterday's spike is exactly what you want to see. Again, my personal schedule, I'm totally free, but pre-market right now, I don't want to trade it. So I'm going to give this a 12. The Reason Catalyst, which is a contract winner, that's a 10 right now. Market environment is 10 for this kind of play. So this is a 71 out of 100. So this is, out of the 3 stocks that I've analyzed, this, it's not really perfect. And at what time is it? Actually, I should change this to a 10 because I'm not going to trade it pre-market. As we get closer to the market open, this will go up. But still, I just want to see an overall range. Oh, what did I just do? I'm not technological. How did I just go down? Go back to the normal view. Anyways, it's a 69 out of 100. So it's a potential trade again, but it's not like an 80 out of 100 or a 90 out of 100 or a 100 out of 100. So I'm watching it, but the things that it got docked for, ease of entry and exit, you have to remember if you can't get executed, for entry and exit. And it was a good thing that it spiked too quick yesterday because it showed, how much this stock can spike. But it was a bad thing that, I couldn't get executed, first of all, so I couldn't even profit. And secondly, what you have to consider, if you're wrong and if it moves so fast that you can't even get in, or what if it moves so fast and you can't get out? So I consider yesterday's miss in any potential trade today because that's going to influence my thinking because I remember how quick it was. Risk reward, again, it's just because of the current price. Like it tried to bounce even this morning to the 230s, 240s, and now it's come down. So I'm just not sure. The same thing with the pattern in the price. I'm actually going to dock this even a little bit more. You can change this. This is not an exact science because, I like the morning spike, but I don't like how its inability to bounce. This could all change at the market open. And I would not suggest you trying to fill this stuff out right at the market open because it will change every single second. And I think that eventually we're going to have a tool that will allow for streaming numbers, so that you'll have a streaming window where you'll see stocks that are rated, 80 or 90 out of 100, and those are potential plays. But as of right now, when it can't bounce that much, I got to dock it a little bit, even though this is a potential morning spiker. I just can't be sure of it. And from what I hope to teach you, you don't have to trade if you're not sure. What did I do? I really slid everything over here. I just want to see the whole thing. I'm going to keep this in here so you see that I'm not that, oh, there we go. So you see I'm not that smart or technological. I get email comments saying, oh, do I have to be a math genius? Do I have to be a computer genius? No, not at all. You just need to study and ideally understand these catalysts. So MDGS so far is the top. Maybe I probably should have had 3 rows. I guess I didn't need to delete all of them. But then we also had EVOK and PEIX. And I think, what was PEIX? PEIX was I think it was a 55 or something, or 56. EVOK was I think it was a 52. I don't know. I'm going to keep all these things in here roughly just to show myself and to show you that none of these are great plays as of right now. They're potential plays, but they're not truly great. And I think you'll find a lot of success, when you stick to better plays. So that's my pre-market roundup for today. I'm still looking at, these other percent gainers. GRPN I should bring up real quick. Groupon is an earnings winner. You can see the big spike here. Let's analyze one more. Why not, right? Let me put MDGS over here. What was MDGS? It was a 67. All right, let's analyze. See, it's fun to plug in numbers. It's fun. GRPN. Pattern price. I really like this reaction to earnings. I really, really like it. You can see the quick spike in reaction. But let's look at, 1 month. Let me get rid of all these news things. This is clearly a nice little breakout over 1 month. 6 months. Looks like there's going to be resistance here at 475 and resistance at 5. You see the little green thing? We're right here. So we're right breaking past resistance from April, but there's resistance from March still above. Let me scroll out even more to 1 year. Yeah, there's a lot of resistance right at 5. When we go out 5 years, there's so many people here. Oh, this is the profile. Oh, we also have events now on Stocks to Trade, like technical events, which is kind of cool. Ugh. Let's see the news. So there's transcripts. Yeah, I mean, this is all just in reaction to earnings. I mean, it's a good spike in reaction to earnings, and it looks like it's holding, near the highs here. But at the same time, I know that there's resistance right above it, or 25 cents a share above it at 5-ish. So pattern price, I'll give it a 12. Risk reward here at 475, knowing that there's resistance just 25 cents above, and the stock is already up, 25% today. So it's already up $1 a share today, and there's resistance 25 cents a share above. That's going to be tough for risk reward. I'll give it actually a 7 at the current price. Ease of entry and exit, I mean, I can get in and get out very quickly. Past performance, history of spiking, and its market cap, not so great. 1 to 10, I'll give it a 3. What time is it right now? Again, I'm analyzing this too early. My personal schedule, I'm totally free today. This is going to be for the morning spike potential. I'll give this a 13. Reason catalyst, again, earnings winners haven't really been rewarded that much in today's market, but it is an earnings winner, so I'll respect it. I'll give it a 7. And the market environment for this kind of pattern is a 7 too. So we got another one in the 50s. So we've got 4 plays. None of them are perfect. They all have their goods, their pros and their cons, their goods and their bads. Groupon, is the strongest pre-market play. Oh, it just broke to a new high, a new pre-market high. So that's good, but see right there, it actually just said that right as I'm filming this. This was a little event, technical event where it's a new high, and that's very good. But I would actually probably be long this stock right now on the new high pre-market, except I know that there's resistance at 5. So that forces me not to buy it because there's only 10, 15 cents a share of upside if it's going to use that high of 5 as, as its peak, which it very well may. So the pattern price, I think, is actually changing because it just hit a new intraday high. So I'm going to raise that a little bit. The risk reward right now is still bad because you have that resistance, and all the stuff. Everything else is the same. What's going to change is the pattern in the price and the risk reward, over the course of the day. But these are 2 big ones. These are out of 20 each. So, I mean, if the pattern price, let's say Groupon, stops right at 5. I mean, that's not very good. If it gets anywhere from the 480s to 490s to 5, that's not good. If it breaks 5, then that's fantastic. So it's kind of weird how certain key levels are more important than others, but you have to watch how it reacts around those key levels. So, all pre-market long, the high here was like 476. So it's technically an intraday breakout right now, which is why I just upped the pattern price a few. But as long as it stays under 5, it's still not good enough to get me in. So the pattern and the price will change and the risk reward will change. Let's just pretend for a second that it's trading, even though it's at 488, 489, let's just pretend that it, just broke the intraday high and it broke $5 a share, which is, the resistance here. So let's play make-believe. It actually did break 5, but it couldn't close there. So we'll see if it can break and how it'll close. I'll watch this all day. But if it somehow, let's say, broke 5, let's say right now pre-market it was at like 502, then the pattern in the price, will go up to like an 18, and the risk reward will go up to like 15 because it would be a breakout, and now it's a 70. So now it's my strongest stock. It's still not perfect because it's such a big company and it doesn't have a big history of spiking, but that's what would change if it would have, you know, a multi-month breakout. So just wanted you to show, to see, you know, exactly what's happening and how the numbers can change and why I think these indicators are going to help you choose the best trades. Thank you.
My name is Tim Sykes, and I teach people to trade stocks. I am a self-made multimillionaire.
So this is the ideal trade that I'm going to talk about. I want you guys to understand every single aspect of this trade.